Hedge funds are doubling down on mega cap tech. That's according to Goldman Sachs, the investment bank, noting that private funds whittled down their overall holdings to focus on their favorites. One of the bank's strategists also highlighting the average weightings of top 10 holdings jumped 70% in the second quarter, the highest concentration since the first quarter of 2020. Let's bring in Yahoo Finance's Jared Blikre here with what these funds are buying, and our tech editor, Dan Howley, joining us to weigh in on the tech sector. So, Jared, let's talk about the shopping list here. I mean, a lot of this you could attribute to valuations coming down.
Yes, valuations have come down. I think the most striking thing from this report is that, yes, hedge funds have gotten into the value trade, as a lot of people did last year and this year, but also they're really getting and doubling down on tech. And those are those big growth names that have been flagging. And what's the reasoning behind that? We don't know necessarily from the report, but that's the way it is. Now, let's go to the Wi-Fi Interactive, where I have a heat map of the top 30 positions. This is a Goldman Sachs hedge fund VIP list. This is sorted by market cap. You can see Apple in this quarter is up 22%, Microsoft up about 7.5%, Amazon 27%. The biggest outperformer here is Uber. That is up 40%. Now, again, these are stocks that these hedge funds like, and this is as of the end of the second quarter. So they could have added to these positions, they could have decreased them. But let's take a look at some of the individual names here. I do have a list, might be a little bit hard to see. First, I want everybody to focus on this chart right here. This is a chart of these Goldman Sachs VIP names since 2002, and we can see there's a huge outperformance until relatively recently. This just fell off a cliff and erased years and years of gains. So again, lots of names to go through here. I'll throw it back to you, Kiko, and we can get back to some of the other metrics in a minute.
Yeah, so Dan, let's talk about some of these names that Jared just mentioned. I mean, Apple, you could argue, is kind of the old reliable in the tech space. We saw Amazon in there as well, but Uber,
yeah.
Did the fundamentals support that?
I mean, look, Uber obviously throughout the pandemic, I mean, at the start of the pandemic, it was like, who's getting in an Uber? At that point, it was, I was afraid to open my window, right? So I think people are going back, seriously, I was afraid to open my window. I think people are finally going back out, but they also managed to build out that Eats business. And that's the big differentiator from prior to the pandemic. They put so much money into building that out, and now it continues to deliver, whereas, the drive, the mobility portion is being lifted back up. It's, still on its way, but I think that's really where that is for Uber. Apple, as you said, old reliable. I think Amazon will right the ship when it comes to its actual e-commerce business. That's been the real drag on it because they overexpanded. And then you have stalwarts like alongside Apple, Microsoft, which, just continues to do well when it comes to its cloud division, despite the jitters about whether or not interest rates would impact how much people are actually, or how much companies are actually going to go out and purchase there. So I think, it all kind of makes sense for these big name tech stocks. I think one of the interesting items, though, is, where's Meta going to fall in there? Are people going to continue to be nervous about ad sales? That's a result of Apple. Same thing with, the smaller social companies like Twitter, Snap. Twitter's got other problems.
In many ways, it's kind of going back to the safety plays that were in place before the pandemic, the mega cap tech names, although you could argue that Meta's kind of fallen out of favor on that. Jared, what about something like NVIDIA or some of these chip stocks that we have seen, get a lift on the back of legislation, but it's been a bit of a mixed picture because we've also heard that demand is softening.
Yes. Citi today said that we may be turning the cycle, or maybe turning the corner in the memory chip cycle, but NVIDIA and some of these high flyers, AMD, we know these are very cyclical businesses. These have flagged over the last years. They've fallen a bit out of favor. I just want to go back to the Goldman Sachs list of the top 50, and this is actually going to be the top 30 holdings on the Wi-Fi Interactive, because Dan was talking about some of the top holdings here. I just want to point out, and this might be a little bit hard to see, Amazon is number one, then we got Microsoft, Alphabet, Meta. Okay, we got all the big mega caps. Then comes Visa. They supplanted Apple as the number 5 ticker. Then we get Uber, then we get MasterCard, then we get Berkshire Hathaway, relatively new one. That's the value trade coming in, and then finally ServiceNow. But so why are all these hedge funds getting into these technology stocks, if not doubling down on them? I think it's because we are at the end potentially of a 40-year downtrend in interest rates. We have rising inflation. But as the Fed tries to juggle everything here, we're already trying to price in when the Fed is going to cut rates. So we'll probably get some kind of echo bubble from the previous epic where we had all these tech stocks, all these growth stocks outperforming. Is it going to last? I don't know, but I think that's what Wall Street is betting on right now, that we have kind of an echo bubble of the previous rallies.
I think it's interesting, just going back to the NVIDIA and AMD discussion about how they're so cyclical. It's just been kind of an up and down for the chip stock companies. NVIDIA in particular, to me, is surprising only because they are suffering so much. They suffered from the issues with supply chain, the chip shortage, obviously, and then again because there was so much demand in crypto. Now that that's fallen off, they had this glut of products that they just couldn't get rid of. And now they've managed to do that. So, it'll be interesting to see what they report when they talk about the enterprise, which is really where they're seeing the most of their growth, but they still rely heavily on the sales of those individual units.
NVIDIA reporting after the bell today.
I'll be there.
You'll be all over it. Ken Howley and Jared Blikre, thanks so much for that.